Good afternoon, sir.
Hi, good afternoon. We start today's market talk. In investing, as in life, character matters. Why am I saying this? We saw recently renewable energy with compelling growth narrative and abundant funding created perfect conditions for governance lapses. And the lesson from Gensol is that transparency and corporate governance aren't negotiable. They are the foundation and basic requirement for sustainable returns. Now, before coming to the three important issues which are impacting the market, a word about what Trump is doing. He is reiterating that the US is talking with China on trade even after Beijing's denial. So China demanded that US revoke all unilateral tariffs and said the two sides aren't even talking. Whereas Trump was saying that we will going to reduce the tariffs subsequently in next 2 3 days, etc., and we are talking and we will have a deal, etc. So there is a conflicting news. Trump is also considering reducing certain levies targeting the auto industry. He also backtracked from firing Fed Chair Jerome Powell. So these were the positive, and that took the US markets up. Now, coming to the three important issues which are impacting the markets, January-March quarter earnings indicate that companies are under pressure in the wake of tepid revenue growth and rising cost pressures. There is a deceleration in operating profit growth due to sluggish sales and subdued demand. Profits are growing for whatever 100 plus companies whose results have come till now. Profits are growing in total in single digits overall. Sales growth have moderated to around 5.5%. IT and FMCG are showing weakness. Uh, Discretionary and new projects in IT have been deferred, with only cost optimization initiatives continuing. So, whatever, if the margins are improving, it is only or they are maintained, it is due to reducing of cost. HUL and Nestle posted weak earnings due to higher input cost and muted urban demand, and results of Reliance were also nothing great. Now, the other issue is which will impact is the which is already starting. Apple is at the forefront of companies relocating production from China to India and wants to do so by the end of next year. End of next year means calendar year 26. Apple plans to shift manufacturing of all iPhones intended for sale in US to India by end of 2026 from China, fast tracking its supply chain diversification and intensifying US China due to intensifying US China trade tensions. They have started trial production run for iPhone 17 series in India already, but Chinese are also delaying and blocking export of key manufacturing equipment and key parts. What Apple is aiming is to ship production of roughly 60 million iPhones annually to India by 2026. Apple manufacturing partners in India are Foxconn and Tata, and they are also ramping up production. So we'll have to see how it plays out and which other companies also start planning to shift production because of these trade wars to India from China. A broad direction of the markets appear to be if the conflict stays contained, that is India Pakistan, it will consolidate. If it escalates, then it will correct. Now, this is very important to understand. What is happening now, as you have seen last week, after Tuesday, Indian equity markets are turning cautious, assessing possible fallout of Pahalgam terror attack. Muted earnings and rebound in foreign flows are pulling markets in opposite direction. So, if you see, earnings have been slightly muted, but foreign funds, they have put in roughly around 30,000 crore already in the last 8 10 days. They are pushing and pulling the market in opposite direction. Now, how it can impact a significant escalation which lead to more uncertainty and higher volatility. Uh, Nifty was negative to flat this week as market is in wait and watch mode. As I mentioned, FIs have bought roughly 32,000 crore in last 8 sessions and have reduced their index short positions. I'll show you that subsequently, but they have added short positions in Bank Nifty on Friday. Now, how this will manifest is very important to understand. Firstly, somewhere in first week of May, you can expect some kind of retaliation, whatever will happen from the Indian side. Now, this retaliation can take place in two formats. One, covert ops, like what happened after where we had done a surgical strike, or in Barakot. Now we do that. Uh, our channels play it up. Pakistan denies it. Nothing happens. Markets go up. But if we do overt operations, which is visible, which Pakistan is not able to deny, then what happens is then they retaliate, and then the escalation starts. So now at what level the de-escalation comes in, till what level is what is unknown. So market would be in a wait and watch mode for both possibilities, and that is what you should be very careful with, because overnight anything can happen. Hence, trade light, volatility can shoot up to any amount. Hence, you can still go in the money, out of the money at any time in your options, etc. So it will be difficult for traders, but for investors, this will be another opportunity to buy stocks at cheap valuations. So keep your buying list ready. You will get good value stocks which will fall suddenly. So whenever there is a panic reaction, that is the best opportunity to buy stocks, because this is a short-term affair. So just keep that in mind. Now, talking about FI data on 25th April. So if you see here, FIs added shorts. They had come down to around 24,000 net short positions in index futures. They have added 10,000 shorts, and primarily in Nifty Bank. So this and Midcap Nifty, and this is what was bringing the market down. Stock futures, they were positive, and they bought a bit in cash, but I think here it was a lot of block deals were there, so that was the reason. Professionals, they were adding longs, so probably they were counterparties, so they are acting differently from FIs, but they have bullish positions in stock futures, and DIs bought in cash, etc. So one has to watch what FIs are going to do in terms of their index futures positions in the next few days. Now I'll show you the trend, how it plays out. It's very simple. So if you see, this last expiry was on 27 March, and FI's short positions were around 30,000 in index futures, and they had done massive short covering before that, right? So on 27 March, they had added 53,000 long positions. So it was there. From there till around 9th April, they kept adding short positions. They went up to 1.16 lakh, and Nifty also went down from 23,592 to 22,399. So we saw that correction. After that, they started adding long positions, and till this expiry on 24th April, so we saw a roughly 2,000 point move on the Nifty, and every day, most of the days, it was positive. And because they were adding short positions, cutting down short positions and added long positions. So they, on this expiry, their positions were reduced to 24,840. And on the last day, they added longs of roughly 45,931. So it is the same pattern which is being followed. And they do a lot of cash buying on expiry day, and here also, this time also they did it. So once the trend changed from selling in cash and covering their shorts, Nifty starts going up. So now just follow this trend, whether they are going to buy in cash and they are adding short positions. That will determine how the Nifty's movement takes place till in the next month or next few days. So just watch this data, then anything else and what people are talking and all that. Now coming to the US, you see, US markets jumped nearly 5% last week, most of the major indices, and sentiment was boosted by President significantly dialing back his aggressive rhetoric against Fed Chair Powell and China. Also, the results were in different directions. Tesla's profit fell 71%, Alphabet showed solid performance. Boeing losses were lower, and dismal quarter was seen from Intel. So the things are moving in different direction. US markets are bounced back, believing that worst of bluster of Trump is behind us, and he will come to his senses as the bond yields made him. And now, if you see here, so the bond yields which had climbed to 4.6 came down to 4.5. Plus, there were some positive noises from Fed governors. Plus, as Trump said that he is not going to fire Powell, so it came down. Sorry, US dollar index also it was coming down. It came down to 98, but after that there was a rebound in the US market, so it bounced back. But it till the time it is below 100, it is not going anywhere, and it will remain weak. And dollar status as safe haven isn't a given now, and unless there is stability in US tariff policy, you can't say that if there is a turmoil all over the world and there is uncertainty, think people will start moving into US dollars. That past outcomes regarding US bond markets, where everybody starts putting money in US bonds, etc., will not play out now, since dollar is no longer a safe haven. Hence, what is happening is there is sell-off in the US markets and funds are moving into other markets all over the world. So USD INR strengthened against the dollar. It came down to below 85, but then it rebounded from there. S&P 500, as I brought out, was up 4.5%. Nasdaq was up 6.43% based on good result from Alphabet. And Dow Jones was up 2.48%. So markets rebounded, and all of them are just poised on the weekly chart below 20 EMA and have rebounded from the lows somewhere closer to the 50 EMA. Brent crude has remained weak, nothing much. It is below 70. Till the time it is below 70, it will remain weak, and it will move as per the news now, how it plays out. And if there is a positive news on Ukraine-Russia side, then the Brent crude prices may go down further. Gold corrected. It went up on Monday or Tuesday on peak uncertainty, and then it has corrected because it has moved up too much. So the prices are beyond comprehension. So now it will sell off, bounce back a bit, and then on the next bound of uncertainty, it can go up again. Copper was flat generally around 1%, so nothing much happening here. Bitcoin was up around 11% last week, so probably I think the money, after remaining consolidating for the last few weeks, it seems that the money is now moving into Bitcoin from gold. So probably that's why this sector is moving up. India VIX is moving up, which is not good, because so if you see in the last 3 days, it has moved up from 15 level to 17 odd level. And that is because of higher uncertainty, it is moving up. It had started coming down, and this is a problem because it ensures gap ups and gap downs and also higher volatility. Now, coming to Indian government bond yields, the flood of liquidity in the Indian markets, which RBI has provided, is nudging the bond yields lower. So you can see it has come down to 6.36 now along this trend line, and it is heading lower. So probably if you hear about another rate cut, possibly it will go lower from here. Now coming to Nifty, please listen to this part very carefully. See, Nifty has made a candle which is kind of a doji, that is high levels were not supported, it sold off, similar to what it had made around 4 weeks back, and after that there was a sell-off. So there is a big possibility. As per weekly charts, it had retraced roughly 50% of the complete fall, and it was heading towards the 61%, but after these events it has fallen back. So it can fall back, it can come to this 38% retracement, which is roughly 23,500 odd level, where this 20 and 50 EMA are also there. So I think the next support should be in this zone of 23,300 to 23,500. Now coming to daily chart. So if you see here, it was negative on 4 days last week after bouncing up on Monday, but it corrected and it sold off after it made a hammer on Wednesday, and then it tested this support of 23,800. So even here also the 20 EMA is at 23,500, so that should be the next logical target. And if you see uh, on the hourly chart, if you see on the hourly chart, you see on the way up, Nifty made three gaps. So the first gap is here, where it took support at around 23,850. So it took support on Friday here and then bounced back, but it was not able to go above the 20 EMA, so it remains negative. So till the time Nifty doesn't goes above 23,400, 24,400, don't be positive. So if there is a gap up on Monday, it will get sold, and then we'll have to see whether this support holds. If this support breaks, then the next support should be this gap, which is at somewhere around 23,300 to around 23,000. So this is the next gap, and after that, this should be the support. So I think Nifty should trade in this zone over the next 8-10 days. This should be the possible area it should trade if this 23,800, 850 level breaks. Otherwise, above 24,400, it becomes positive. Nifty Bank, again, a similar weak candle on the weekly charts. So from the higher level, 56,000 level, it sold off. So if you see, last week I had given you the targets of around 55,600. So that were achieved. That is 23% extension of the rise, fib extension of the rise. So that target was achieved. And then it went up to around 56,000, and then from there it sold off. So this is looking actually weaker because it is still far away from the 20 EMA. So unless and until Bank Nifty goes above 56,000, it will not be positive, but it can always come down here. So the next first line of support should be around 53,000 level, because it has moved up too much, and there on the way up it has created a lot of gaps. Now the rise was led by HDFC Bank. It failed to go up to 2,000, and then it retraced from there. So first line of support should be this 1880 level. If this breaks, then 1850 odd. So that should be looked at. So if this support holds, then Bank Nifty will again rise. Nifty and Bank Nifty will rise back again. Now Reliance, it is in a channel, on a downward moving channel. So it moved from the lows of 1120 to around 1300. Now here it encountered that resistance at 200 EMA, and it has not been able to go above that. Based on the results, I don't think there is much of strength. So this breakout failed here for Reliance, and I think it will come and test the support levels. Now if holds at 1260 odd levels or 1250 levels, that has to be seen. If it breaks these levels again, then it will again test the last low it made. So this is one problem for the Nifty. Now Nifty Midcap Select, this is the one which I shorted the big way along with FIs on Friday. And if you see, it fell roughly 2% odd on Friday, and it is heading lower. So probably it will head to this 11,600 odd levels, which is a 20 EMA, because from the top. So from the bottom, it provides an opportunity to go long, and from the top, if it rises, then that is an opportunity to go short. Nifty small cap 100 weekly chart. So if you see here, it has failed to cross the 20 EMA on the weekly chart. So it has come down, and probably it will test this 15,000 level again now. IT index was the one good performer last week, up 6.56%, probably from the oversold levels. So it has gone up. Results have nothing great, but probably from the oversold level. So till the time it is above this 200 EMA, it is good. So 33,000 should be the level to watch out for. If it remains above this, then it should do well. Otherwise, it will again come back and test this last low and may head lower. Now, I'll cover two stocks. First is Pitti Engineering. Now, they specialize in manufacturing of wide range of products such as electrical steel laminations, motor cores, sub-assemblies, die rotors, press tools, and are the market leader in lamination vertical, which is part of the rotating electrical equipment vertical. Now, you must understand what it is. In any motor, there are two parts, rotor and a stator. Now, stator is static part and rotor is the moving part. Now, laminations are the thin sheet of electrical steel stacked together to form the magnetic core of an electric motor, rotor, and stator. So it is a very critical part of a electric motor. So this is what these guys make. It reported a 40% year-on-year increase in revenue, primarily fueled by contributions from recent acquisitions. So they had acquired two companies, leading to a 50% rise in sales volume, 17,185 metric ton in Q4 as compared to 11,435 metric ton in Q4 FY24. The company is focusing on increasing capacity utilization, which is expected to drive volume growth going ahead. Company commissioned a new production line in its Aurangabad facility, bringing its total sheet metal capacity to 72,000 metric ton. Its problem is exports. The earnings are roughly 33 odd percent are from exports. Out of the total exports, 30 to 35% are contributed by US, 55 to 60% are contributed by Mexico, and the remaining goes to various other countries. So that is the problem right now. The company has commenced consolidating revenue from the acquisitions it did, Bagadia Chaitra Industries Private Limited and Dakshin Foundry Private Limited. So these were the two acquisitions they did, and Pitti Casting Private Limited, which is their subsidiary. Now, robust pipeline from new machine component products, which has further enhanced with the start of machining operations from casting manufactured at DFPL, that is Dakshin Foundry Private Limited. So they are now moving from laminations to castings also. So that is why now they are growing that part of the business also. Industry is likely to continue experiencing supply side challenges related to electrical steel due to expiration of licenses of Chinese players and new safeguard duty. Now, this is a problem because they are importing this electrical steel from China. Hence, that import problem is the one which is another challenge. So that has to get sorted out. But they have a capacity, even if there are safeguard duties which are put, they have a capacity to put across the higher price to their customers. So they have that pricing advantage. So where all they are involved in, firstly is in rotating equipment vertical, renewable energy, power generation, data centers, consumers, automotive, industrial, special purpose motors, mining, traction motors, and railway components. And as I told you about machined components, where they're doing casting in mining equipment and renewable energy. Now, if you see here, this is the breakdown of their different applications or for revenue breakup. So if you see here, the traction motor and railway components, this is Q4 FY25, is doing well and it is growing. Special purpose motors are also doing well. Power generation, they're getting good sales. Industrial and commercials, they are getting good sales and growing. And the new upcoming sectors for them is data centers, automotive, appliance and consumers, and pumps, where they are growing their business. So they are in different fields. So that is, they are not restricted to one part. Now coming to their profit and loss. So if you see here, year on year, they grew around 40%, slightly below the brokerage estimates, and Q on Q around 13%. Gross margins were slightly down year on year. EBITDA was up 54% and Q on Q 20%. Margins improved, EBITDA margins. What has happened is this quarter, the other income was low, so which is impacting overall profits and EPS. But if you see at EBITDA level, they are doing reasonably well and are growing in these difficult circumstances. Now, what they are guiding for is that This year, they have done around 1,700 crores revenue with EBITDA margins of 18.2 and a PAT of 122 crore and EPS of 32. So what they are guiding for is around 2,000 crore net revenue with the acquisitions they have done with machining, etc. Better EBITDA margins and roughly 172 crore of profit with 45 rupees EPS. And in FY27, they are guiding for around 22,261 crore with roughly 54 EPS. So even if you take a mean of 26, 27, around 50 EPS, at 50 EPS at around 25 times, they can easily trade at 1250 to 1200 to 1250 should be reasonable level to trade. Now seeing their chart, so if you see here, it went up to around 1500 in those December and then it has corrected. And the lower levels it has seen at around 850 odd. And after the results, it has started correcting. So, in my opinion, around 850 is a decent opportunity to buy this business for a long term. This was here it got oversold and now it is below that. So that should be a good opportunity to get this business. Though it is coming down with higher volumes because probably the results were not as per expectation, below expectation or axis, but not that bad. And these are reasonable businesses which are growing. So that is one. Now the other one is Mahindra Logistics. Again, very interesting company. It's an integrated logistics and mobility solution provider. It offers supply chain expertise to diverse industrial verticals such as automotive, engineering, consumer goods, pharmaceuticals, telecommunication, commodities, and e-commerce. Demand recovery is witnessed in auto, passengers and farm segment, consumer durable, cables and wires, e-commerce, and quick commerce. Revenue from contract logistics 3PL services is up 10% year-on-year to rupees 1230 crore. The warehouse space which they have, this 3PL is third-party logistics, which these guys provide. So they handle all the logistics for other companies. So the companies don't have to handle their logistics part. These people handle it. The warehouse space increased from 13.3 million square feet in first quarter FY23 to 20.8 million square feet in fourth quarter FY25. They recently acquired the B2B express delivery business of Rivigo, which is a startup for logistics. Freight forwarding business may be impacted in short term due to impact on global trade with tariff uncertainty. So what is going abroad may get impacted. It has entered a partnership with Asian Paints for Pro Trucking Integrated Transportation Solutions for extensive pan-India line haul moments. Mahindra Logistics, if you see here, they have grown around year-on-year, grow around 10-11%. EBITDA margins has improved and EBITDA has grown from 566 million, that is 56 crores, to roughly 77 crore. So roughly 30-35% is the EBITDA growth here. Rest parameters are okay. What they are doing is they do a lot of depreciation. So that takes care of their profits. Hence, it appears to be having a loss here because of lower PAT, because they are doing a lot of depreciation of assets. Now, what happens is, if you see their vertical wise segmental revenues, they have two major segments: supply chain, which is growing well and which has grown roughly around 10% or over the last year, and enterprise mobility, where they provide mobility. I'll show you what it is. So they are growing fine. And in terms of segmental details, the biggest segment is contract logistics, then which is up around 10% year on year, and others are network services, B2B express, freight forwarding, last mile delivery. So in contract logistics, the gross profits were up 7% year on year, and gross profit percentage was around 10%. So that is in line. Now, what they do is, in terms of their logistics part, they do contract logistics, B2B express, last mile delivery, and freight forwarding. Now, B2B, business to business, and PTL, that is partial truckload, they do. Uh, this is one part of their supply chain. And then the other part is mobility solutions. So they do the employee transportation, airport services, on-call services, outstation, etc. So they've got enough uh, for network services, etc. They have got enough segments which are involved in transportation, warehousing, fulfillment, distribution, tech integration, last mile delivery, industry specific solutions, global network, etc. Now, coming to their segments again, contract logistics is the one, which is one, then B2B services, cross border, last mile delivery, mobility. So, all of them are now in that growth phase. As the economy and the other requirements grow, then these will do well. In terms of infrastructure, if you see here, they have 20.8 million square feet space, 30,000 workforce, locations across India, 1100, pin codes covered, 19,000, EV fleet, 16,660, 1600, 660, global trade lanes, 50, full truck trips, 50,000 plus per month, 47 million green kilometer ocean freight, 10,000 TUs, 12 crore package delivered, 4.1 million square feet space with renewable energy, and 1,500 plus business estates network. So they have good infrastructure where there would be decent replacement cost. It can't just be recreated. Now coming to their P&L. So if you see here, this year they would have done around 6,100 crores. Next year they're expected to grow around 11%, 11-12% over the next 2-3 years. EBITDA is expected to grow around 30% overall the next 2-3 years. So due to better margins and as the business is growing, and now because the depreciation is going to remain at these levels only, hence they will become PAT positive now over the next 1 or 2 years. So decent PAT growth. So if you see here with 39 crore, which is expected in FY26, they would have a EPS of around 5.5 in FY26 and around 12 odd in FY27, with return on equity, etc., improving now. And the best way to value them is on EV EBITDA basis. So in my opinion, anything below 10 EV EBITDA is a good business to buy. Now coming to their charts, so if you see here, in 2020 March, they had come to around 200 levels, and then from there went up to 800 odd levels. So this was the COVID low, right? Where now it had come down to 240 level in the April, right? It has risen from there, and with over the last few years, the amount of infrastructure, etc., which has been created, somebody sold it off or something like that. But this is one business which is at EV EBITDA below 10, so it offers a lot of value on all dips. So that is why I was slightly positive about this stock, because it gives a lot of value at these prices. And the business is there on ground, and this logistics business will grow. I've finished. We'll take questions now.